Markets are convulsing again, and this time not because of another rate hike or a debt crisis. Washington is panicking even though China has not yet taken a single step. United States Treasury Secretary Scott Bessent suddenly backed away from Trump's threat to impose 100% tariffs on Chinese goods. Behind the scenes, the reason is obvious. America simply cannot afford a new confrontation. For decades, the United States controlled global money flows, and now China controls the materials without which modern technology is impossible. Rare earth elements, magnets, batteries, they are needed for everything from missiles to Tesla electric vehicles. Beijing has not even shut off the valve, and Washington already feels strangled. While markets rise on rumors of a possible truce, one question remains unanswered. Who really runs the situation? Because this struggle is not just about tariffs and trade, but about power. And that power is rapidly moving away from the dollar. So after Bessent's panic and the collapse of the tariff threat, after Trump's shocking statement about 100% tariffs on all Chinese goods, the world froze in anticipation of chaos. But instead of carrying out the threat, Treasury Secretary Scott Bessent went on a tour trying to calm allies. Cameras followed him from London to Seoul, where he repeated the same line that China is a bad actor that must be punished for weaponizing supply chains. It was the same script Janet Yellen used in 2023 to 2024 when Washington accused Beijing of excess capacity. Then it was about electric vehicles and cheap steel flooding markets. Now it is about rare earth elements without which no chip, motor, or missile can be made. Bessent made his statement after the United States quietly raised tariffs on a number of Chinese goods to 145%. The effect was immediate. In April and May 2025, shipments of rare earth elements from China to the United States fell by more than 60%, shocking technology and defense firms. But Beijing did not completely cut off the flow. Cargoes continued to go to India, Vietnam, Thailand, and even Germany. Within a month, exports had almost recovered, showing how targeted China's countermeasures are. Beijing did not want a global crisis. It wanted Washington to feel the pressure. While American companies scrambled to find alternatives, Chinese state-owned corporations redirected supply chains and signed new contracts across Asia. Every ton sold outside the United States reminded the world where real power now lies. The signal in the halls of power in Tokyo and Berlin was clear. If Beijing can overnight reconfigure strategic supplies, the balance has already shifted. And while Bessent assured investors that new alliances were being built, China calmly proved that control of resources is stronger than any loud threats. China's advantage in this fight is built not on words but on control. For years, Beijing has constructed a supply network unmatched by any country. About 70% of the world's rare earth mining and almost 90% of their processing is concentrated in China. These materials are literally needed for everything from fighters and wind turbines to smartphones, and that gives Beijing two powerful levers of influence. The first is to tighten exports, slow the supplies, and American manufacturers immediately face rising costs of production. Every sensor, magnet, and battery becomes more expensive and investors begin to waver. A Japanese chipmaker or an American drone company will think twice before expanding in a country that can at any moment lose cheap raw materials. That psychological pressure alone can move markets. The second lever is the opposite: crush prices. By dumping large volumes on the market at low prices, China can bankrupt new American projects before they even start. The company MP Materials is staying afloat only thanks to subsidies, and a wave of cheap Chinese metals could wipe out its investments in a matter of months. Beijing has already used this strategy in 2015. After a short export ban, global prices fell by almost 60%, and foreign competitors simply disappeared. Beijing has not yet pulled a single lever, and Washington is already reacting, a sign of who really has their hand on the switch. Facing domestic pressure and chaos in the markets, Bessent tried to change strategy. Instead of new tariffs, he began talking about building a global coalition against Chinese control of exports, essentially reviving the old Fortress America concept under a new name. He declared that the United States would unite the G7, India, Japan, and other like-minded partners to counter Beijing's dominance in critical resources. His promise sounded loud: "We will not allow these restrictions to continue." But behind the scenes, there was no support. Europe is on the brink of recession, and its auto industry and green technologies depend on Chinese materials. from lithium-ion batteries to rare earth magnets. The German electric vehicle sector alone imports more than 80% of these components from China. Japan and South Korea, still reeling from American tariffs earlier this year, are not ready for new turbulence. India, despite political frictions, is actually expanding trade with Beijing. In 2024, trade turnover exceeded $136 billion, and Chinese components remain key for India's solar and electronics industries. While Washington tries to rebuild alliances, Beijing has already opened a new front, the financial one. Its quiet withdrawal from American assets has turned into a steady exodus. In 2016, Chinese investors put more than $57 billion into mergers and acquisitions in the United States. In 2025, that number barely reached $2 billion, the lowest in a decade. At the same time, China is continuing to cut its holdings of United States Treasury securities, selling them or simply not rolling them over as they mature. In just the last few months, Beijing has reduced its holdings by more than $25 billion, according to the United States Treasury Department. Each sale pushes yields higher, raising borrowing costs precisely when the Federal Reserve is trying to ease policy. And as the bond market shakes under pressure, new data from China makes Washington's position even more vulnerable. While the United States accuses China of distorting global trade, the statistics show the opposite. In September 2025, Chinese exports grew by 8.3%, reaching almost $330 billion, the fastest pace in 6 months. Shipments to the United States did indeed fall by about 27%, but those losses were offset by rising sales to other regions. Exports to Southeast Asia, the Middle East, and Africa jumped by 15 to 18%, thanks to new trade corridors under the Belt and Road Initiative. Even the European Union increased purchases of Chinese components for electric vehicles and solar panels, despite ongoing tariff disputes. At the same time, China's imports rose by 7.4%, signaling a revival of domestic demand and a shift to a regional trade model. Beijing is actively buying raw materials from Brazil, Australia, and Indonesia, while developing production partnerships with India, Vietnam, and Malaysia. All this points to a deeper transformation. China is no longer just the world's factory, but a global logistics hub connecting both ends of the supply chain. Meanwhile, American exporters are losing ground. United States shipments to China have fallen to their lowest level since 2009, and soybean exports, once a symbol of agricultural power, are close to zero. By expanding its network of trade partners, China is only tightening its grip on global commerce. The trade war that was supposed to isolate Beijing has instead accelerated its diversification. Trump built tariff walls while China built relationships, and now those relationships are turning into powerful new trade alliances. China has spent decades building ports, factories, and digital infrastructure that connect partners directly to its economy. It does not need conflicts to expand its influence, only consistency. Scott Bessent's strategy of trying to contain China through public relations and tariffs completely ignored this fact. He tried to fight a global supply chain with a microphone, and while Washington talks about defending leadership, Beijing is simply continuing to build it. Contract by contract, corridor by corridor, payment by payment. Washington can print dollars, but it cannot print rare earth metals. The next great confrontation will not be about tariffs or trade, but about who controls the world's currency. So what do you think? Can the dollar survive this storm? Share your thoughts in the comments, and don't forget to subscribe. See you in the next episode.